Good morning, everybody. Welcome to another edition of Roadhouse Last Call morning show. It gives you or morning. Ender, how are we doing this?
Good morning. How was your weekend?
Ender, how are we doing this morning?
Can you not hear me?
Armin, how are we doing this morning? Is anybody here? Anybody out
Oh,
there?
now you can hear me. Good morning. How was your weekend?
My weekend was good, man. I whooped up on some of this land. I made a dent, and I can actually see progress.
And you still have all of your appendages?
Everything. I have it all. I have it all.
You know death threats from your old friends at the hippie
They
convention?
don't know. They do not know.
This is good.
There's an element of witness protection going on here. I have not let a lot of people know that I have moved on out of California. I've kept it slightly secret. Few people know more than some of the, I put this in quotation marks, friends that I have in California. I don't know why. I don't know what to say. How about you? How was your weekend?
It was good. I cut down a couple trees as well.
Did you?
Started on a little clearing, but we got this crazy storm Friday night, tons of rain, and everything was muddy. So trying to get things in and out was a challenge. There's now tire tracks that leave my property and go for about a quarter of a mile, just thick mud. It's like I look back in the rear view, I'm like, nobody will ever know where that came from. You could never tell.
Never. All right. Well, let's get into some of the things that are, I guess, kind of sort of moving the markets here a little bit. Inflation again is, the top-notch topic going around everywhere. White House is trying to do some things in order to ease some of those inflation pressures. They're set to reduce tariffs on some of the Chinese household goods. They're also waiving solar tariffs on solar names for the next 24 months. That apparently somehow is going to stimulate growth in through there, even though they're taking away a little bit from domestic production by opening it up globally. It's a little bit interesting, a little bit desperate, a little bit a lot of things. But the bottom line is, if it lowers the overall pricing, then that can be good from an inflationary standpoint. They're also looking to waive certain sanctions on Venezuela in order to free up crude going into Europe. That's been a topic of conversation also. So to stick with the theme, China is now ending its investigation of several companies, including Diddy. Did you hear that, Bender? Diddy.
It's a little too late for the Diddy.
Is it too late for the Diddy? It was up big time.
But do the do-what Diddy. Is that a thing?
It can be a thing.
Okay.
It's most.
No, the Diddy play that was the Vegas punch Dill in the face bet. That time has come and gone.
Very unfortunate.
Yep.
A late dollar short. We'll see how some of these tickers react in general. They're tech tickers. They have not been able to get any type of real traction. Every pop has been sold for going on, it seems like, the last 2 years. Let's see if this is any different. See if it can actually hold a level, which it has not been able to. So Chinese tickers should be on watch also. Apple also begins its developers conference this week. It's a full week of conversation as far as new products they may be putting out. It looks like they've revamped some of their software, and there's rumors as far as a new Mac Airbook being floated, as well as a new headset that is going to be more fun for augmented reality, that type of stuff. So again, Apple usually sells after these events. It is a multi-day event, so I think flow and price action over there should be really, really interesting to watch, and we should keep a very, very close watch on that. In other more broad news, pension funds are demanding more transparency and better terms from private equity and hedge funds. Obviously, there's pushback there from these funds. They're basically citing that more transparency and requirements and reporting requirements will only hurt the investors because of the costs associated with them. These types of topics, when it comes to regulation and transparency, both for the common investor and pension funds, it should be more and more in the news headlines as we push forward under this administration. There is a real sense that that the little man of these pension funds are taking a backseat to the hedge funds and private equity firms, and that chess match will continue. So, not sure exactly how that impacts us directly, but it is something that will be out there. Data-wise on the domestic front, it's a fairly light week this week with everybody looking for Friday's CPI number. That's going to be a very, very big number to see if inflation has indeed peaked, the way a lot of economists believe that it has. Obviously, there's pressure still coming out of Russia, and the pressures on crude continue to keep that number probably a little bit more elevated than it should be. But that number will be very, very important, especially going into next week. We have the Fed's rate decision. That is going to be something that we all know. We are all expecting a 50-cent bump this month and next through July. So that is expected, that is understood. I think it's going to be more how the data sits coming up to that meeting, and then Powell's speech obviously is going to be important. So usually when we have these type of binary events like a Fed decision, we have a period of risk off. We just need to figure out where we are, because we've traded basically sideways for the last 10 days. So when we're trading sideways for the last 10 days, the question becomes, what truly is the risk off going in this meeting? As the week develops and the flow develops this week, I'm sure we will get a better idea as far as that. One of the things that I've been watching probably the most closely and plan on watching very, very closely this week will be the dollar. Last week's mixed jobs data really had the market looking every which way as far as how to interpret it. While more jobs were added, wage growth did decline or slow down. Very important as that we're looking at this inflation number and consumer spending and the strength of the consumer. Many economists believe that the consumer is able to maintain its spending streak based on their savings and then beginning to tap into their savings and credit. And we do have a credit data point later on this week that look at. This overall battle of inflation that's being waged by the Fed against the American consumer, the data points that we're seeing on the dollar are going to be very, very interesting to see how it reacts. Because while the Fed has said that they will raise 2 more times, the meeting in September is what a lot of investors are starting to look towards. And apparently you can start seeing this in the bond market and the yields associated with that. There are buyers dipping back in and picking up corporate debt. That is something that's happening after they dumped it for the past several months. So they're coming in and re-picking up corporate debt. Again, very, very interesting how this overall chess match is being played, this give and take between the Fed, their mission to drive down inflation, the administration's mission to drive down inflation, and how the market is reacting. But I think the tell within all of that will be the dollar more so than anything else for the casual observer. So the dollar is going to be something that should be watched very, very closely. Bender. Now this is where it becomes really interesting, because you are going to set the stage for the week as far as your levels. I've been looking forward to this all weekend. Last week you absolutely killed it with your levels. So please tell us what we got, buddy.
Well, Amazon's down like $2,300. It's cheap.
I think we should buy that dip. I don't know why I haven't already this one. Crazy.
Yeah. So this 4150, I think, remains key. We've got the that 41.34 level from last week, also, very, very important. On the 60-minute on ES, we've got 41.45 now is the 10 MA, with the 50 just below it at 41.41. So a pull on the open, we look at the 10 and the 50 there and see if that holds. And you've got 41.30 is the 20 MA below that. So that, 41.41 to 41.45, the 10 and the 50, and below that the 20 down at 41.30. Our 5 MA on the daily has moved up to 41.25. So everything between here and 41.25 is really just levels that you could look at, and these targets change throughout the day because they're moving averages. But all of these on any kind of pull, we look at those and go, okay, if we're going to get momentum to push to the upside, we want to see these hold. At least, for now, we're still in this 40.80 to 41.80, and we've got to get past that. This is a longer term area that was support and is now acting as resistance. So we're kind of still stuck until we get through that one way or the other. So if 41.50 holds, bulls are going to want to see 41.80 and then really want it over 4,200 to try to continue any move to the upside. If we don't hold the 50 or those moving averages, bears, they want to see it below 41.34, and then that 41.10 that was pretty important, and then obviously that opens the door to 4,100. I hate giving out so many different numbers, but when you see the price action that we've had, going back early last week, and even the Thursday, Friday before that, it's sloppy. It's been a mess when you get these moves of sometimes 100 points up, 100 points down, and then you kind of got to look for those lines, those numbers that have been the areas where we just bounce until it breaks, or we hit our head on it over and over again. And the numbers that still stick out to me are the same, as they were last week, that 41.34 and 41.10.
Thank you for that. Which, look, it's like you feel fairly confident in levels you're putting out there because it still goes back to 1 + 1 = 2.
Right.
You're giving both upside and downside areas, and considering where the market has been trading and how it's been trading, we have to look at resistance as truly being legitimate resistance. It does not get ripped the first time around.
Absolutely.
And sometimes those levels of support, they're not really levels of support. It's like it's almost going back to flipping it to when we were in a bull market and things were absolutely humming. Resistance was a joke. It could be smashed on any day at any point in time, and didn't need a real reason. Now we're on the flip side of that, to where resistance is truly resistance and support becomes but knowing these levels of interest, and I think that's the best way we can look at it, is areas of interest. That's how we can kind of plan around the day and know when to pivot based on what we're seeing. And I think you did an incredible job last week of. We bought several scalps last week, dips that were absolutely phenomenal. So, and you're doing that based on these levels, which I think are very, very critical, both to my trading and to the room in general. So thank you for that.
Awesome. Yeah.
Mr. Stockington, I wonder if he's awake. Oh,
Yeah.
There's a mumble and a grumble.
I'm waking up. Yeah, so it looks like a gap up kind of morning. So if you are listening here on Discord, you can go into our Roadhouse room and see some charts I put in the room. So gap ups, especially with everything being an inside day, there's going to be a lot of repositioning at the open. Those who are short are going to be very red, et cetera, et cetera. So I put some levels in here. Microsoft is going to be really interesting because this 273.24 from last week was the 1.1 billion or so dark pool. So now Microsoft is stuck between that large dark pool 273.24 and another one from last week was 271.84. So I'll be watching that, just kind of take it slow, see which one of those gets a reaction. It looks like for now it's kind of drifting down below the $1 billion level. AMD is going to be interesting up here. I posted the chart. I'd be looking to see if we can kind of break that pre-market resistance 108.7, and then below I have a longer term fib at 107.8. So posted some charts on AMD. NVIDIA, I'm going to be looking at 192.25, the break above that for potential long. And then this 190.95 was another level I had as kind of like a longer term one to watch. So stuck between those two. Square, I think, is going to be really interesting this week with the inside bar on the weekly. It's just been consolidating. I put the chart in the room. It's got this like long-term wedge that it's been stuck in that is now also stuck between two dark pool levels, 86.22 and 84.79. So you could watch the break for a quicker scalp, or just kind of give that one some extra time to see what it does out of this bigger wedge. And then SPY. So SPY was getting these signature prints all day on Friday at 417.36, which must have been delayed because those are all trading. That would be outside of SPY's range from Friday. And I also had a dark pool line on SPY at 415.37, which is basically just above where we are now. So those are two levels above on SPY that I'd be keeping an eye on. If SPY is going down, I have a line here at 413.60 even, and then the big dark pool that was important all of last week was at 412.07. There's billions of dollars sitting right there on the SPY. So that's what I'll be watching for today, along with flow and all that.
Good. So just from what you're sounding like, you're looking for more upside than downside coming into the week. Am I understanding that right?
I mean, I try and go no bias. The gap up is interesting, but I mean,
Kind of just it's more based on your commentary as far as how you're looking at it. If I'm wrong, just say no. I'm misunderstanding what you're saying. But it would appear that what you're talking about, the conversation point was more looking towards the upside than downside.
yeah, I mean, I don't really have. I don't know that I would be looking upside more just based on charts. I think just kind of got to take it slow. I mean, can get more charts going here in the room. We were looking. Bender and then Cypher took another look at my kind of downtrend line on the SPY, which I can repost and get some more feedback. But it looks like we could maybe watch if that downtrend line now can, work as like a support line, and we'll look at that in the room.
Very good. All right. Very good. Anybody else in the room? I know that Sun posted a couple of things regarding airlines, solar names. So we cover those solar names. Airlines also with Spirit. I guess they sweetened the deal over there for the yellow plane. I guess we'll continue to keep a watch on that. A lot of it feeds back into a lot of ways how the consumer is changing their spending habits from buying stuff that they can have to spending money on things that they can do. That should again be on watch, especially going into the next earnings cycle to see how some of these airlines and resorts actually perform. That'll be very, very curious to see how that all kind of plays out. Summarize, my eyes are going to be peeled on the dollar. I think that's basically going to give us what we need as far as the price action, especially with Microsoft coming out last week and basically stating that the stronger dollar is hurting them. And they effectively guided down in a lot of ways based off of that. Microsoft is not the only company facing that same headwind, but any weakness in the dollar should be looked upon as being strong for specifically a multinational. So the dollar, and then going in watching flow to make sure we get a decent handle on how they're wanting to trade going FOMC next week. I think that's going to be very, very important. So with that being said, does anybody have anything else? Anything to add?
Nothing from me.
Lavinda. Very good.
I am good.
All right, we got about 20 minutes. Thank you, Bender. Ackington, go ahead and regroup a little bit and come back and kick some ass this week. Thanks again, fellas.
Thanks, Hells.
Thanks again for listening, everybody.